What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So in this video, we will be talking about the S&P 500 and the Nasdaq index. I'll give you guys a market update. We'll go over some of the stocks that were down on the day. Then we'll do some technical analysis. We'll also break down two articles that came out today that essentially go over where the S&P 500 could be headed, what's going on in the markets. So as always, if you guys enjoyed this video, please make sure to drop a like. It really helps out with the channel and recommends this video to other people who might be interested in watching. Also, make sure that you subscribe if you're new and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. So markets on the day were down yet again, and this is the third consecutive week that the markets have ended in the red. So you guys can see that the S&P 500 was down over 1% as of the time of this video. If you were to go over to the Nasdaq index, it was down just about over 1%, and the Dow Jones was down a little bit less than the S&P 500 and the Nasdaq. It was down just about 90 basis points. So if you go over to some of the SPY holdings, you'll notice that Norwegian was down, Carnival, Royal Caribbean, Boeing, Delta, American Airlines. Apple was down over 3%, Google was down over 2.4%, GE, MGM, Nvidia, AMD, Amazon, IBM, 3M, ExxonMobil. If you were to kind of scroll down, you'll notice Microsoft there, Disney, McDonald's, Walmart, Caterpillar, Nextera, Energy, Facebook. Pretty much everything was in the red, and this heat map essentially shows you the 1 day's performance for the entire market, and you'll notice that majority of the stocks were in the red except for some healthcare companies like Johnson & Johnson's, United Health, and CVS. But that being said, if you were to look at the weekly chart, you'll notice that majority of the stocks are in fact in the green except for tech, right? So Microsoft, Apple, Amazon, Facebook, Google, they are all down on the week, and that's obviously what's dragging the markets lower because of how heavily they're weighted on the markets, on the S&P 500 and the Nasdaq. Obviously, if they're going to sell off, they're going to drag down the markets with them. So definitely they are some of the biggest companies in the world. So if they're not performing well, or if they are pulling back and correcting themselves, then obviously the markets are going to suffer as well. So now we're going to jump over to the first article that gives us a market recap and what happened on the day and on the week, and where can we potentially see the markets going in the near future. Alright guys, so this right here is a quick update on the market. So you guys will notice that the major averages fell for a third straight week, notching their longest weekly losing streaks since last year. The Dow posted a slight week-to-date loss. The S&P 500 lost just about 70 basis points, and the Nasdaq was down just about 60 basis points over that time period. Shares of Apple dropped more than 3% on Friday, like we went over earlier. Microsoft and Google pulled back 1.2 and 2.4% respectively. Netflix dipped just about 10 basis points, and Facebook was down just about 10 basis points as well. We're seeing a short-term underperformance from these stocks, but also outperformance over the long term, said Mark Travis. And he also noted that tech struggles are very short-lived, and many of these companies generate a lot of cash and have impenetrable balance sheets. Big tech was also down broadly week to date. Facebook, Amazon have each dropped more than 5% this week. Google, Netflix, Apple, and Microsoft are also sharply down over that time period. For the month, all 6 stocks are down at least 10%. Apple specifically has plunged 17.2% in September. From their peak, Apple shares have fallen 22.6%, and the company has lost close to $500 billion in market cap. So that is a pretty significant sell-off, and that just goes to show that Apple in general has lost close to about 1/5 of its value since its peak set in the first week of September, and it's lost close to about $500 billion in market cap. Now, of course, today was also the Quadruple Witching day, which I had mentioned in my yesterday's video on market volatility and the update for today. And it's essentially a day that happens 4 times a year, and on the third Friday of the months of March, June, September, and December. And today was September 18, the third Friday of the month of September, and a lot of the futures and options contracts expired at the same time. That creates a lot of volatility in the markets. So you guys will notice that Friday's moves came as a series of individual stock, ETF, and index options expired, potentially adding to some of the session's volatility. Tech stocks like Apple, Amazon, Microsoft were among the names where investors had been aggressively buying call options. There's no surprise there. And there was heavy activity Friday in Apple's call options, for instance, which expired out of the money. Apple fell 3%. Options in Tesla are also actively traded, but that's one of the only stocks that were higher on the day, along with Shopify. So if you were to kind of scroll down, this right here is going to be the tensions between China and the US. Also dampened on the market's sentiment after the US government essentially blocked TikTok and WeChat downloads in the country starting Sunday. And Oracle, which is trying to take a minority stake in TikTok, parent company ByteDance, fell just about 70 basis points. The Republicans and the Democrats are still struggling to agree on how much aid to continue to provide in the follow-up bill to the previous $2 trillion package. So President Donald Trump has essentially said Wednesday that he likes the large numbers. So now we're going to jump over to the second article that essentially goes over why we could potentially see a divergence and a disconnect between the stock market and the economy going into 2021. Alright guys, so this right here is the article from CNBC that essentially says that the economy and the stock market will become increasingly disconnected from each other in 2021 as the companies are likely to reduce headcount to increase profitability, and that is being said by manager Kevin Nicholson. He told CNBC on Thursday. So he essentially says that the firms are going to focus more on profitability next year, and this is quote unquote going to create a divergence between the economy and the stock market. And he says that you can increase profits in two ways. You can either increase your sales and revenues, or you can cut costs. And I believe that the companies are going to do the latter, and the biggest expense they're going to have is their employees. A lot of these workers that were furloughed will not end up coming back to work, and they're going to be permanently unemployed. So that's definitely very unfortunate and is going to significantly affect the economy moving forward. And essentially says that the pandemic pledge that a lot of the companies put out there will go away as they move towards focusing on profitability unless they are not laying off workers. More than 13.5 million Americans are still out of work compared to the pandemic high of about 23 million people. And a Yelp study essentially found out that 60% of US businesses that have shut since the start of the pandemic won't ever reopen. Now Nicholson also sees and expects the S&P 500 to range between 3,400 and 3,450 until January and move sideways due to the volatility caused by the upcoming elections. So now we're going to jump over to my TradingView platform to map out some key support, resistance levels, follow up on all the previous updates on the S&P 500 and the Nasdaq. Alright guys, so here we are inside my TradingView platform. Again, if this is the platform you'd like to use for yourself, the link is going to be down in the description below for you to get started for free. Again, it's going to be the third link down in the description below. So there's a lot for us to digest and a lot of information being thrown at us from a macroeconomic standpoint, from a sector standpoint, from a rotation standpoint. There's a lot of different things that we need to consider. If you were to look at the VIX, which is going to be the volatility on the S&P 500, we had essentially mentioned this right here, how we've seen a significant spike in the volatility in times of uncertainty and in times of fear when people are not sure where exactly the markets are headed. So this right here was a surge in March. This right here was a surge in June, and this right here was the more recent surge from last week when we saw a severe drop in the markets and tech more specifically. So I had essentially mentioned that we could see a gap fill right here, and as the VIX is making lower highs, we could see a drop in the volatility. And of course, the volatility was high this week because of the Quadruple Witching week and also of the uncertainty that is around the markets related to the elections. But moving forward, like I said, this right here is going to be my prediction and my opinion on where the VIX is headed, and there is going to be a significant pullback on the volatility until November when elections come around and we could potentially see another spike in the VIX. So this right here you guys can see is going to be the first week of November, so starting right here and going up till November 27th, and that right there is another potential for the VIX to spike, and which creates a higher volatility environment and a drop in the S&P and the Nasdaq. So now going over to the S&P 500, these right here are going to be all the levels that we have marked in all of my previous videos. We completely blew below this support level or a bull camp at around 3330 to 3300 level. So you guys will notice that we broke all the way down to levels of 3291, but then we essentially got bought up towards the last 4 hours and we closed at 3319. So there was definitely some support at 3300 level. So that right there is going to be our next support that we need to watch. So the markets are making some type of lower lows. So you guys will notice that we are showing some significant weakness with a very clear level of resistance right there. So 34.25 is going to be our new resistance that we need to watch because we have gotten rejected there multiple times. Going back as far as September 9th, once again on September 10th, we retested that level on September 16th, going back on September 15th, but there is a very strong level of resistance. So I'm going to go ahead and mark this as a bear camp. Now, like I said, the markets are making lower lows, so we are going lower than we did the previous time, so that's definitely a sign of weakness. But that being said, in my opinion, this level right here, 3280 to 3300, is going to be the next support. Now, is that support going to be validated? It's very hard to say, very hard to predict, because the markets have been very, very volatile and uncertain lately, and given the weakness in the markets, I could potentially see a retest down to 3280 for the markets and break below the 3300 level next week. So the S&P 500 has already dropped close to over 7% from its highs, from its all-time highs, and that's going to be a drop of over 8%. But moving forward, the 3280 level is going to be the next support, which is going to be right here, and that has previously acted as a really strong resistance going back as far as July 21st. You guys can see right here. So this level, in my opinion, should act as a really strong support if the S&P were to come down and retest this level. And in terms of the resistance, the 34.25 level is going to be a very clear level of supply in our bear camp that we need to break out of once again in order to see any new all-time highs at 3600. So now quickly going over the Nasdaq, ticker symbol IXIC. This right here is going to be the analysis from last night's video and also all of my previous updates. We had essentially mentioned that there's definitely a lot of weakness for the Nasdaq. A resistance sits at 11,250, a strong support at around 10,850, but the Nasdaq, similar to the S&P 500, is making some type of lower. So it's definitely weaker. So it's definitely showing signs of weakness, and I would not be surprised if we do see some type of a push higher next week and then drop even further, because like I said, there is definitely weakness in the markets because we are making these horizontal resistance levels, but we are going lower than we did the previous time. So that's the market indices making lower lows. So other than this lower low, the next support for the Nasdaq is going to be right here, which sits at 10,200, and that's what this green rectangle represents. And that's going to be a pullback of another 5 to 5.5% from its current levels. It doesn't have to happen, but just based on the fact that the markets have been incredibly weak lately and there's been a lot of aggressive sell-offs intraday, I wouldn't be surprised if we do see some type of a retest. But again, long term, I am not concerned about these pullbacks. I'm just looking at these as great buying opportunities and something that I can work off of over the next 5 to 10 years, right? Build out those positions so when these stocks essentially do end up hitting all-time highs once again, you are already in a very solid position. So I hope you guys enjoyed this video and my quick technical breakdown on the S&P 500 and the Nasdaq. If you did, please make sure to drop a like. It really helps out with the channel. Also, make sure that you subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.